Okay, section C. Okay, section C is all about performance measurement. It's all about performance measurement. Okay, now, so let me just list it down, what we'll be covering here. Okay. First part is performance measurement. We can say performance measurement issues. One is private sector. Then division. Then NFPO. Then non-financial indicators. There is a topic separately on this. Then quality management. And human resource management and behavioral issues. Okay, all right. We start with private sector, then division, then we'll go one by one. Okay. Right. Okay, so the objective of profit-seeking organization. So profit-seeking organization or for-profit organization is a private sector, isn't it? Right? Now, so objective, as we know, is maximizing shareholders' wealth. Primary objective is to maximize shareholders' wealth. Okay. Shareholders are legal owners and their interests should be prioritized. They stand to lose the most in the event the firm becomes insolvent. Hence, they take the highest amount of risk. Management of a company should focus on providing continuous and sustainable growth in shareholders' value. Okay, so that should be the primary goal of any business organization. They get continuous and sustainable growth in shareholders' value. Are you following? Right? Now, as an investor, shareholders' main concern are the current and future earnings, dividend policy, change in share price, risk and return. Okay, now coming to this, right? When we talk about the shareholders' when we say change in shareholders' value. Right. Now, you say, let's see from a shareholder's perspective. If let's say an investor, shareholders and is an investor. Let's say you are the shareholder here. So let's say you bought 10,000 shares of this company, ordinary shares like equity shares, okay, at 250. So that means basically you have invested 25,000 in this company. Correct? Now, so basically it's like you have contributed 25,000 to this company as a capital, equity capital. Yes or no? All right. So now the question is, you say, so the company that you have invested now 25,000, right? So the company reported, okay, the business reported let's say 2 million profit. For the year, reported 2 million profit. Does the profit comes to you? Maybe, maybe not. You get? But of course, you don't call it as a profit. The profit distribution is called dividend. Correct? Now, so this is where the issue comes in, right? Now, does this really reflect, does it truly reflect the change in shareholders' wealth? When a company make 2 million profit, is the shareholders of that company now become richer by 2 million? We can say theoretically, the reality is it's not. Yes or no? Right? Now, so that means the answer is, of course, is a big no. Right? So then why do we calculate profit then? The profit is just reflects the performance of the business. Of the business. Okay, it just reflects the performance of the business. It doesn't really reflects whether the shareholders' wealth is going to increase or decrease. Do you get? Now, so as far as the shareholder is concerned, right, now what the shareholder will be looking at now, see, so let's say end of the year. current share price, let's say 280. Current share price is 280. And dividend received $0.10 per share. $0.10 per share. Current share price is 280 and dividend received is 10 cents per share. So that means now the value of investment now, or the wealth, okay, the change in shareholders' wealth is, as far as this particular shareholder is concerned, that means you bought 10,000 shares, you bought it at 250, now the current price is 280. So there is a gain of 3,000. Is that right? Now, then the dividend that you receive, that is an additional inflow. So that is 10 cents times 10,000. That will be another 1,000. So your wealth now increased by 4,000. It doesn't matter as a shareholder, right? It doesn't matter whether how much of profit they make. So that means your current wealth is what? 25 plus 4. You get your current wealth is 29,000. Right? That is what really matters to the shareholders as the investors. Are you following? Right? So that means from the shareholders' point of view, right, the profit that we are reporting might not have much of a value. You get? Now, so of course you can argue that, when a company make a profit, that should push up the share. Yes, true. It should push up the share price. But again, it's not the profit. What matters to the shareholder is the change in the share price caused by the profit you make. Are you following? All right. Now, so therefore, right, when we say the objective is to maximize shareholders' wealth, then profit is not sufficient to measure the achievement of that objective. You get? Now, so we continue to calculate profit, but then we keep saying objective is to maximize wealth. You get? And it does not really equate to be the same, right? So that is where the issues comes in, the complication comes in, right?